Assalamu alaikum. My name is Muhammad Hamdullah bin Naseem, and we are here to present an equity report on Fauji Fertilizer. My group members are Muazzam Saeed, Niaz Ahmed, and Muhammad Hamdullah bin Naseem. Then we are going to represent the equity report on Fauji Fertilizers. Basically, here is the table content, the content which we are covering in our report: investment summary, business description, and products, industry overview, and competitive positioning of Fauji Fertilizer. And after that, we will do a financial analysis on the base of different ratios. After that, we will find the valuation of the equity of Fauji Fertilizer through different price multipliers, and we will discuss the investment risk in our financial report. First of all, we will start from fertilizer. Fauji Fertilizer, basically, if we start with its full name, it's a Fauji Fertilizer Company Limited. Uh, Listed in the stock exchange is basically FFC, and basically and tax and the center of the FFC is fertilizer and its price is 1.93. And here
So now we will discuss about the investment summary of FFC. First of all, we will discuss about main recommendation. Based on the available information, I recommend a hold position for FFC. Recent news: in 2023, FFC reported its higher ever annual profit, net profit surging by 48% year-over-year. Despite economic changes, the company achieved remarkable financial performance. Going forward, we have the historical performance of FFC, which says net income growth 5-year trend plus 37.83% and sale growth plus 44.32% and urea production was 2.5 to 1 million tons. We also have some highlights which says FFC achieved its highest ever annual profit in 2023. Urea production reached a new high and import substitution strategy yielded substantial foreign exchange savings. And net sales increased due to high demand for urea and DAP. DAP is a diammonium potassium, which is also a product of FFC. Now we have conclusion based on the analysis of multiple valuation matrices like price to earning ratio, price to sales, price to uh, cash flow. FFC appears to be consistently undervalued relative to its industrial peers over the analyzed period. We also have some recommendation related to its valuation methods, like considering the undervaluation indicated by multiple valuation matrices. Investors may consider FFC as a potential investment opportunity. Investors with a long-term investment horizon and a risk-tolerant approach may consider buying or holding FFC stock. Going forward, we have the business description, which is then represented by Niaz.
Assalamu alaikum. My name is Niaz Ahmed. Chapter number 1 Business Description. Fauji Fertilizer Company Limited (FFC) is a Pakistani urea manufacturer based in Rawalpindi. It was incorporated in 1978 as a joint venture between the Fauji Foundation is leading collectible trust in Pakistan and older trust of the Denmark. Here are some key points for FFC. First is production. FFC produce and market various fertilizers including urea, DAP, SOP, MOP, BORN, and zinc. The first urea complex was commissioned by FFC in 1982, Satrabad, Punjab. To meet growing urea demand in Pakistan, uh, second plant was built in the same location in 1993. FFC is also participated as a major shareholder in a new DAP urea manufacturing complex, which later became Fauji Fertilizer bin Qasim Limited, formerly FFC Jordan Fertilizer Company Limited in 2000. In 2002, FFC acquired the Saudi Fertilizer Limited urea plant from the National Fertilizer Corporation. And next, FFC marketing group become the largest fertilizer marketing network in the country, marketing nearly 3.4 million metric tons of fertilizer annuum under the brand name Sona Urea after the acquisition. In 2012, FFC commissioned a wind farm project with the capacity 49.50 in 2013. FFC acquired a 43.50% equal stake in AKBL and also acquired 100% of Al Hamad Foods Unlimited later then made and Fauji Fresh Limited. And next is chapter number 2 is explain Manzala.
Okay, so now we will talk about the valuation methods. First of all, we have price earning ratio. Price earning ratio, which is basically defined as measures a company's current share price relative to its earning per share. It indicates how much investors are willing to pay per dollar of earning. Now, this ratio shows a complete overview of FFC price to earning ratio. In 2017, price to earning ratio was 3.6, and similarly, we will compare this ratio with the industry benchmark. Industry benchmark ratio was 6.58. Now, the price-earning ratio indicates how much investors are willing to pay for each dollar of earning generated by the company. A higher price-to-earning ratio suggests that investors have expectations for future growth, while a lower price-to-earning ratio may indicate undervaluation. Now we analyze this ratio, which says FFC consistently maintained a lower price-to-earning ratio compared to the industry benchmark throughout these years. The industry benchmark's average price-to-earning ratio was 6.58, while FFC average price-to-earning ratio was around 3.55. Based on this comparison, FFC appears undervalued relative to the industry benchmark. Next, we have price-to-earning ratio. Price-to-earning ratio also used to evaluate a company's performance relative to its sales. Now we the price-to-sales ratio as compared to the industry benchmark ratio, which is also said as the average of the industry. The average of the price-to-sales ratio of FFC is 2.64, and industry benchmark ratio was 3.07. In this hypothetical example, the average price-to-sales ratio for FFC over the period from 2016 to 2022 is 2.64, while the average price-to-sales ratio for the industry benchmark is 3.07. Since the average price-to-sales ratio for FFC is 2.64 is lower than the average price-to-sales ratio for the industry benchmark, it suggests that FFC might be undervalued relative to its industry peers based on the price-to-sales ratio. Next, we have price-to-book ratio, in which the average of the price-to-book ratio of FFC is 1.8, and the benchmark industry benchmark ratio is 2.1. We analyze this ratio, then it says the average price-to-book ratio for FFC is lower than the average price-to-book ratio of the industry benchmark. It suggests that FFC might be undervalued compared to the industry peer based on its book value. Price to book value also used to assess whether a stock is undervalued or overvalued. It compares a company's market capitalization to its book value. Going forward, we have the price to cash flow ratio. It measures a company's stock price relative to its cash flow per share. Now, this ratio shows the average of FFC price to cash flow ratio, which is 5.0, and the benchmark ratio is 5.6. Now we analyze this, and we have the result, which says if the average price to cash flow ratio for FFC is lower than the average price to cash flow ratio of the industry benchmark, it suggests that FFC might be undervalued compared to its industry peer based on its cash flow. Next, we have some investment risks. First of all, we have market volatility, which says FFC stock price is react to market fluctuation influenced by economic conditions like geopolitical events and investor sentiments. Similarly, we have commodity price risk, regulatory environment, currency risk, operational challenges, gas supply, uh, and lower than estimated fertilizer demand. Decrease in fertilizer prices below expectation is also a major risk for investment, in which if fertilizer price falls significantly, it may impact FFC margins and profitability. Also, the foreign exchange risk affect investment as FFC exports its product, which exposes it to fluctuation in exchange rates. Adverse currency movement can impact revenues and profitability. Similarly, we have another risk of regulatory changes and policy uncertainty, competition and market share erosion, and raw material price volatility. Now we have some conclusion based on the comparison of FFC key ratios, significantly the price to earning ratio and price to sales ratio. When industry benchmark, it appears that FFC ratio are relatively lower higher than the industry averages. This suggests that FFC may be undervalued or overvalued. Also, we conclude the result for valuation in which for investor this present an opportunity risk depending on their investment strategy. If the investor seeking for potentially undervalued stock with growth potential, FFC could be an attractive option due to its lower specific ratios. So this was our report. This is on the equity evaluation report of FFC. That's all. Thank you.